Hey everybody, welcome back. We have a lot to go over. First and foremost, we broke at 5,000. I was really excited about that. You can see that just that little pop up, and that actually happened because of the 10-year. Had some buying around there at the 10-year today around 1 p.m. We could see that movement pretty clearly, and it was a fairly decent move. And then you saw tech push. We're going to talk about that push. We're going to just talk about how this just acted perfectly all day. There's very little to say here about the action in the actual ES. It was just candidly, it was just perfect. You can just see the rallies, the little builds, the breakouts, your little angles here, your little builds again, you pop up, and you just kept doing it all the way into the close. So it's exactly what you want to see, exactly what we wanted to see, quite frankly. So we got what we wanted. If you were somebody that is a bull, and again, I always tell people, cull your feed, watch what you listen to. A lot of people are out there saying, oh, we shouldn't be doing this. We're going to go through ARM's earnings, DPST tonight. I do want to show a P&L because it's linked to 3 different trades that we did and one system that I utilize that helps me manage those trades very effectively that people can pick up on their own and make their own. We need to talk about NYCB for sure. But again, here we are, and we get to see the breakout. Now, we have a lot to cover, and I wanted to spend a little time on the indexes, but there's really not much value add here, is there? The only thing I should really add before we go further is to go through a couple things, look at the sectors, understand where we are. But more importantly, you need to watch the bond market tomorrow. You have the 30-year auction tomorrow. I believe it's at 1 o'clock. You can check that. If it's wrong, just put it in the comments. But I believe we're at 1 o'clock tomorrow. Usually the big dogs, the long end is usually done at 1 o'clock, and the shorter end is usually 11:30. So it should be 30-year tomorrow at 1. You want to watch that because from that time on today with the market, it became increasingly clear that there was really nothing that was going to slow us down. Once that time hit, you can just see that 1 o'clock level where they just did the initial move, right? We always talk about mark those 5-minute bars off, and then whatever way you go is how you go. And I know that doesn't sound prophetic, but when you see that the low of the day just happened to be there and how that correlates to the previous high, right? And then you come here and you mark the high of that bar and you see how we held that all day. It's not a coincidence because when you have these kinds of movements after an event like a 10-year or a 30-year, you now know where the algorithms are. If you know where the algorithms are, you can then watch the action of the algorithm. It's not rocket science. You just have to know, what you're looking for. But one thing I'm seeing a lot of, and I'm trying to be very balanced here because there's a lot of moving parts here, right? If you watch Monday's video, I talk very specifically about the divergence that I'm seeing. And we have a lot to go over, so I'm not going to spend an inordinate amount of time on it. But we're seeing a divergence here for sure on the NASDAQ between advanced decline lines. Now, this is obviously going up. And then at the same time, what's happening? We're watching this go down. The advanced decline line on the NASDAQ is dropping. And that is something that we want to pay attention to, right? It's not something that we want to pretend is not happening. So we went over that on Monday. We looked Tuesday at the market. And the one thing that we said was we just don't want to tell the market what it's going to do. And so that's why I always tell people with these videos, they're all connected. I apologize for not getting them out sooner lately. It's been a little hard because I've been very active and I wanted to listen to the conference call. And I really spent a lot of time on tonight's video, which I usually don't spend this much time. I spent a couple hours prepping this one because there's a lot in here. But if you look at SMCI, and this is what we talked about yesterday, we had that hammer. You don't end with basically a dragonfly at the top of a pattern. I walked through what happened with ASAN. If you go look at that on an earnings, this is not how it ends. Eventually, you pop up and then you get some kind of reversal like a shooting star, and that's how these end. Even if they end for a short period of time, that's how they end. Remember the AVGO? And everybody thought that was the end of it. But really what it did was, you get these moves where you're out of position, right? $600, and then within about a month, you go really from May on, you go to like 921 and everyone's like, oh, that's the high. That'll always be the high, right? And then eventually it's not the high. But, now it's support back here in December. But it takes time to work that off. It takes time to grow into these, right? We saw that with NVIDIA. We see that it takes time to grow into these. You had 3 quarters of record earnings before you got the next leg. So when people are saying, oh, well, this is crazy. Well, okay, for 9 months, you had record revenue and record earnings and the stock went nowhere, right? Just stayed in that range between that 380 to about up here, that 460. Sometimes it pop its head over at 500 and then get whacked. But then eventually it finally broke out. You're seeing this pattern a lot, by the way. And I'm just going to walk through this because someone pulled this up today in the pre-market live, the public. And whenever they do, I want to make sure that I give them credit for bringing this up. They've been trading in the room, but somebody brought it up today. Whenever they do that, I want to make sure that I give it the time and attention. It hasn't closed yet on the weekly, but you're looking at almost a year base here. And this looks to me like you're setting up. And you see the higher lows. So whoever brought this up in the pre-market live, the public one, just FYI, you're probably going to want to keep your eye on this. It's setting up nicely. But the point that I'm getting at with SMCI is it ends like AVGO ended, right? It doesn't end with like a hammer or what you refer to as a dragonfly at the top of a chart. And that's one of the things that you want to pay attention to. Now, this is going to lead us into a couple things that we're going to talk about today, like ARM. ARM has been a stock, and I want to just show this, ARM has been a stock that we have talked about for some time. We literally, and this is one of the things that I really want to hammer home to people. A lot of times I get said that, oh, he's a day trader. And I don't really take offense to that. If I do day trade. You're going to see several day trades if you've been watching these videos. But day trading, and the way that I always try to spell this out to people, and I'm going to explain this because I think it's important. The way that I always explain it to people is that if this is the universe of trading, then this portion would be what I would do on a certain part of day trading in here. And then this would be swing, this would be long-term, and then over here are special situations like M&A deals and option deals, okay? And then based upon where we are in the economic cycle or in the actual cycle of tech, you remember when you go back to the stool, these will move. Where instead of 25%, it might be like 35, 40%. If we're peaked or we're coming out of a trough, this might move over, not swing, and it might be more long-term. It's really important to get that you want, as time goes on, you want all the techniques so that you can utilize the techniques for the current environment you're in. That was pretty profound. You might want to listen to that again. When I thought of saying it, didn't come out as good as it just did there. So just leave it at that. I'm not going to show all of these, but when we run when we put out alerts and things like that, we have varying sectors. We have day trades, swing trades, options, right? Long-term positions. Long-term positions are things we're trying to stay in for a year. After a year, I just take them out. So like, for example, we have pins in here. We paid 18, it's at 40. I take it out after a year and you're on your own. We'll talk about it, but I'm just not going to monitor it the same way. But why I'm showing this is these are the dates that we entered. Now, you're going to see dates here in November 28th, December 14th, and you'll see when we bought ARM. I'm showing you this for a reason. 62, 70 is what we paid, and you can see those dates. Now, why did we start here? Well, you can see when we're starting in this, right? So this is earnings, and we didn't buy during earnings. We started buying in here. No one was paying attention to it. Why did we start here? I want to show you, because this is a really important thing that I think a lot of people are missing out on. And not everyone's going to have access to what I'm saying here, and I understand that. But you see this right here, earnings. Okay. During this call, if you have access to research or you read research, during the call, Goldman came out and said, this was much better and shows better growth for ARM than it does for NVIDIA. And they were saying that people are not understanding this. So once we saw that, we waited for, that told us who, then we waited for what, right? Now we know who, what, and then we're looking for when. And what is when? When is when something technical happens on a chart, right? So you want who, what, when, and all of that is defined. The who is defined by macro. What is your fundamentals? When is your technicals, right? If you think about it that way, it starts to make more sense. So then when something like this happens and this pops over, okay, when something like this happens and it pops over, you're already positioned for it. So we're already positioned for it. We're already aware of this, that this could have a really good time. So we're up and in it before the event so that we're not wasting time. This allows us the flexibility of two things. One, to know exactly what they're looking for. So we're already lined up with the earnings, with the conference call, the whole 9 yards. You're already stacked, right? So after you're stacked and you're ready for this, then the call comes out. So I want to go through this call, and so you understand what came out, why it's down $12 after the call, why it's not as great as people think it is, but it's actually excellent, but it's not as great. We're going to talk about that. But this ties in, and how I traded this ties into 3 other trades. So I want you to watch this first, and then we're going to get right back into it. So the response to me showing a P&L, like a daily P&L, it's been pretty good, so I'm going to keep doing it when I think it's appropriate. It's appropriate tonight because there's 3 very specific trades that I use the system that I want to show you how I did these trades. So I just want to walk through what you're saying. This is today. We did 24 in the account. We're up 24 grand. This is the ARM trade. I wanted to listen to this conference call. We're gonna get into that later in this video for sure. ASML, we're not gonna really talk about. I still have that position in this account. For those that are newer to this is just bear with me on how I'm setting this whole thing up. I'm not used to even having the camera on. I noticed last time it looked like I was like staring straight up. So just bear with me as I figure all this out. But why I want to show this is because I used the same technique for ARM that I used in DPST, that I used in Snap last night. I used the same technique over and over and over again. And I want to talk to you. You'll hear me talk about positive slippage a lot, but I really want to get into this so that we can dive into it. So ARM is something that we will definitely be covering tonight. ASML maybe, but we definitely want to talk about the snap trade, which we will. We definitely want to talk about what happened with ARM and DPST today, so we're going to get into that. But the same technique was used 3 times, and so that's really why I wanted to show this. And without this technique, I would have been somewhat second guessing when to get out of these trades. So I do want to walk through this and show you exactly how I was doing it. Okay, so now you know the framework of where I'm going with this and what I want to show you what we're going to do. Before we get into that, I do want to go through the quarter itself. So this is the quarter and this is their guidance. I want to be really clear about this. Prior guidance was 720 to 800. They're at 850 to 900, right? Non-GAAP 460, 490. Non-GAAP fully diluted 21.28 range to 28.32. All right. Revenue 296,308 to 32 to 31. It's a bump. It's good. It's not NVIDIA good. It's not SMCI good. All right. And there's a difference. And there's a couple things here that stood out. We're going to talk about this in a moment, but I want you to see these revenues and I want you to just take a look at this. So these are slides. You can get these slides directly from their website. If you have trouble finding them and you want them, I was going to put the in a Dropbox where I'm going to actually start. People actually asked for the time and sales on some of the things that I show. I have no problem with that at all. And again, that's one account that is somewhat aggressive in its trading style. Other accounts I trade, differently with more of a long-term feel, but that account's linked to the room. That's why I'm showing it. But again, you should spend some time looking at this and just see what you're looking for, right? So like you're seeing year over year, total access licenses, 80%. They got into this on the call, and we should talk about this so that people understand what happened on the call. Why did it go from 108 to 94? Really important details. But I want you to get this. It's really important to me that you understand that this was a complete and utter blowout before I trash it, which I'm going to do a little bit right now. So let's get into this. Very simply, right off the rip, we knew exactly what to look for. We knew exactly what it had to beat. What we do is the same thing that I've been preaching on this channel for free. You don't have to be a member of the community. For free, I've been saying, put an anchored VWAP the moment that this comes out. Now, for time's sake, what I'm going to do is just show it right here. So you can see right here, ARM bought NVIDIA, 401, 4 o'clock, right at the time. And then it just took off. And you can see gain 11 on ARM, up 14. Locked NVIDIA in, made $2 because I didn't like the action in it, and then trimmed up 17, left less than a third on. Look at the time. Look at the time because when I get into this, you're going to see why I'm saying that. Added full again, 438. Remember, they trade into the conference call. Remember that. There's a lot in this video, guys. I put some time in this video, so there's a lot of stuff in this video, little lessons. They trade into the conference call because those people that are short want to make sure that they're in the conference call. Trimmed 108, up 13. Actually just got lucky, top ticked it. And then down less than 50% again. And then we listen to the call, record revenues, record earnings. This is what starts to happen. I tell my drop dead. So that means that breaks that century mark. Boom, I'm out. Short call, increased guidance, high end. It's not NVIDIA. It became clear. Single digit royalty, sold 100% out. We'll look again later. Here's the problem. The Q&A, right? The way the Q&A went was not great. It was not. And so what started happening here, I won't get into PayPal, but what started happening here is 25% of revenue is from China. Their whole expansion came from one quarter and they're not willing to expand on the next quarter right now. That's when you started to drop here, okay? And the technique that we're using to do this from that sheet is we're using positive slippage. Okay, so I want to be really clear on that. When my stocks are going up, when I'm long, or down, as I'm going to show you a DPST trade here. When my stocks are going up when they're long and you're getting that huge move, I'm not cheering. I'm selling into it, right? Because everything ends, right? I hate to be a party pooper, but everything ends. So you want to sell when they want something, right? When's the best time to sell something? When everybody wants it. Just think about it that way. So when these are popping, you're getting out. You have the ability to get back into a trade, and you can get back in at a relatively, easy price with something like this. And all you're doing is a demarcation line is you're using your after hours anchored VWAP. For example, anyone that's in our community that trades after hours, and we do a lot of the after hours trading, especially on this kind of stuff, because that's when you have the most significant moves in the least amount of time. So if you know what you're doing and you have a process, it's where you can make the most amount of money, quite frankly. So you can see right here, right? Like as soon as you break, anybody that's in the room knows that's it. And they may have even bought here and done very well with this trade, right? Back to 101. Point that I'm getting at here is as this is going up, right? As this is going up, we're scaling out. So, and that's why I wanted to show you that. So I'm scaling out into this. I'm watching the consolidation. I'm watching it start to break down here. As it starts breaking out, I'm pulling money out. And then I start to get it stopping. I see the pattern and I'm like, you know what? This looks like something I want to get into again. Now I get the bump right here on that move. And it's very simple. I just look at it and go, this is a great spot to add because I can quantify my risk. So you might want to listen to that again. So I can just quantify my risk and go, all right, 96, 94.35 right off that bar. I'm already up all this, right? And I've already scaled it out. I've already locked it in. So what am I losing here? Please listen to this. What am I losing here? I'm going to lose $1, $1.50 after I've taken out $15, $17 to put the whole darn thing back on. Like it's a no-brainer to give that a chance. Even if I have no more than a 50% win rate here, who cares? You put the trade back on, you can see how it moved. Actually, it was right in here I did it because it was at that 434. That bar just looked the same. So it was actually right here that I did it. If you look at that, because that's what the timestamp if you go back. Anyway, so all we're doing is scaling out right into it. Can you say that this doji marked it? You could, but you don't know that because it's not 5 o'clock yet. And then as soon as he started speaking, it was just like womp womp. It was not the call that you wanted to expect. It was still a good call. I still expect this to be positive. Can this pull an AVGO? Could this mark a high in semis tomorrow? It's out there. That's a possibility. But when you understand how you do these kinds of trades and you understand how this works, you can do this anywhere. Now, we did the same exact thing on the short side with Snap. The whole way down, once it started cracking, we're scaling out, right? The whole way down, we're scaling out of the trade after we're in it. If you didn't catch it, you didn't catch it. It didn't matter. All you had to do was just wait for the conference call to end. And then after the conference call ended, that was pretty much it. Even into the conference call, you could have picked money off of. And then what we did from there, if I reset this chart and open it up, all I did was just reset levels and look at last night's levels. And then from there, all we were doing, rallies up, starts to roll, and then we just start shorting it. Now, let me be really clear. I came in short and we shorted more. We were watching this buyer at 1166. I'm going to show you where this buyer was. But we're doing the same thing. So we're short up here. We're watching this buyer, right? There's someone that's buying there. These are different trades, and they're highlighted by that. So I'm not going to get into all that. But if I take this out and you just look, you'll see levels right there. So if I come across and you drop like this 66 in, let me just show you that little wick right there. I saw it. It kept holding. Now you're going to say, well, there's not much to that. Here, watch how much is actually there on that low. And this is why you always mark, please listen to this. You always mark your pre and post lows. You want to know where they're at because you're thinking that you don't know how much is there. You're assuming that you know, right? But you really don't know. They might not have shown their full hand. And look how many times it had to hold there. It took 15 minutes in that area before it cracked, tries to break it, and then that was it. Now you know that guy's gone. What are we doing as it's breaking down the whole way? We're pulling money out. We're pulling money out the entire way down. And it doesn't matter whether or not that is an option. It doesn't matter if that is, it doesn't matter if it's a stock. It doesn't matter if you're trading futures. It's the same soup over and over again. So these are from yesterday. You can see them here, not in the video, but let me get to the other one. That were different trades. All right, so these were the puts I wanted to buy. To me, it was crazy that DPST was still in a position where it was even up and that NYCB was even trading. It made zero sense to me whatsoever. And if you've been following these videos, we've been doing this for some time. All right, so fast forward, what happens? After we get into these, we come in this morning, everyone's kind of nervous because they're trading, the stock's trading up. It is what it is. Trade's either going to work or it's not, right? I have no control over that. All I can control is how I manage the trade. That's all I can control. So then if you take a look here, what we're doing, we're just scaling out of it, right? So how are we scaling out of it? Here, watch this really quickly.
There's options. I think we could under 3, 4. I mean, if you're having an issue or you're scared, you break even on them, just close them. I'm going to put a sell out there to sell some of those puts at like 4, 4.25, something like that, just in case it gets goofy. I want to sell into the strength. So I'll put that out there at 4, just in case it goes so that I get something on it. I don't have a lot out there, but I have some. All right. So I sold some of those DPSTs at $4. Now I'll put some more out there at $5, just in case it gets goofy. And we'll sell some of those at 5. They halted. Shocker. Absolute shocker. Shocked, I tell you. There's not much to do. I mean, it's just going to keep getting worse and worse. All right. Sold some of those at 5 on DPST. So now I'm going to go out there and put a bid in at 6. So all we're doing is putting these bids out there on those puts. So all we're doing is putting those out there at levels so we know we can get out of them. right? While it's dropping. That's what we're trying to do there. I don't know what people were thinking buying this today on DPST. I just got taken 6. Then I trimmed, but they halt this again. They're halting you to the upside. They're halting that to the upside. You have to realize what that means is that when that opens, DPST is probably going to go up. If you know that NYCB just bounced here and it went from 370 to 390 and they halted it, that means it's going to reverse when that opens. Move the stop to 5 on that. Well, it opened down after that gap. Really shouldn't do that. It actually should have pushed. I mean, you're up 100% in those calls. There's nothing wrong with just taking it. I think they're going to rip it here a little bit. So I'm going to reduce more of those calls. So I reduced more of those calls, like 580. And then what I'm going to do is the rest are just going to be placed at 5. When that gets to 5, I'm going to close it and just take my gain. Same with the stock. I can figure out what the stock is later.
Okay, so there it is with an option. What are we doing? Positive slippage the whole way down. Now, the option, there's a little bit of a trick here that we did, and I'm going to just walk you through it. We know that these are thin options, meaning the spreads are wide, and you can see this with SMCI too. When SMCI does this, or something, whenever you have an option that you're trading, and that option puts you in a position where you're like, geez, this is a spread I could drive a truck through. Let's say that here you're looking at like a 3-5, right? Like the bid's 3 and the ask is 5. If you go out there and you put it at 6, not at 4, but you put it at 6 and it drops, they may reach for your option and you're going to get positive slippage, right? So as you have an option position on, you put it out of the reach of his ask. You don't put it on his ask, because if everyone puts them on his ask, then he's going to know where the market is. If he starts seeing stuff down here, then he's realizing that he might be wrong, or if he needs to hedge that position a little bit more, he might reach for it and he's going to grab it fast, right? And that's what usually happens. So I put, when I'm dropping like this, I figure it out where I want to put them. And then what I do is I put them out of the reach of where the ask is. I don't put them in between. They might go off in between anyway. They might go off on the ask. Clearly they're going to. But what you want is you want them out of reach, but you want him to know where your offer is so that he knows that if he gets it to there, he has X there. Because I'm not going to be the only one that has an offer there, right? So he can kind of figure that out. And then what we did was we got out of the way, saw the bar, as you saw the trade, and then got out. That is 3 different trades that I used the same exact technique on. 2 were shorts, 1 was a long after hours, right? And then on top of that, 1 was an option. It doesn't matter. It's the same thing over and over and over again. And this is why when I showed like the P&L for January, the point that I'm getting at with this is it doesn't matter. Your win rate matters, but your process matters more. How you get out. Because let me explain to you what most people do. They'll look at ARM, okay? And they'll say, I don't want to hold it for earnings. And then it pops up after hours, right? This is like rookie hour. And then when it pops up after hours and it goes higher, they'll buy it. Okay, then it drops down and then maybe they're going to get out of the trade because it hit their stop loss. Then they're going to buy it back maybe. And then it might get a doji and maybe they make something on a couple dollars. Then it's going to pop higher and now they're really annoyed because they didn't get it and the conference call is going to be amazing. And then they get in and now they're down about $12, okay? Instead of doing all that, if you put your position on, scale out of your position, hold a remaining position, and then trade around that, and then scale out again, you're a lot better off because by holding that partial position, at least you're still going the way of the trade and you still have the feel of the trade. It's the way that you're viewing the situation that's affecting your decision making. There's a lot to unpack there. I went through a lot tonight for a Wednesday night video, but there's a lot to go over tonight, and I do want to go over a couple more things. So one of the things I did notice, and I do want to point out to people, someone pointed it out today, this EWM, you're seeing this breakout here. Let's take a look at this on a weekly. So let's just take a look at this, and obviously this is the Netherlands ETF. You're starting to see this break out, right? Okay, so this is breaking out. Look at the DAX. Okay, you're at all-time highs. Okay, they are rotating of our names out of US equities, and we're starting to see them rotate into European equities. For what reason, I don't know. Could be valuation. I'm not really sure of it. But it's definitely something that we need to be aware of. And why we're seeing this, when you start looking at the weightings, you start seeing where the money's going. So one of the things I noticed yesterday was there was no give here. So this was something that we bought. I think you actually saw it, the swing. But we bought it at like 900. I wanted to buy it cheaper. It never gave me the chance with these setups in here. But when I saw the volume kick in yesterday, we got involved. This is definitely something that should be on your radar. Are we up in it already? Yeah, we are. I think we're up like 20 or 30 bucks, 20 bucks. But you're going to want to watch what's going on in Europe, and you want to take a look at that. And I noticed this yesterday, and I meant to post it, but then there was just too much going on, and I want to leave you with this. Actually, there's a couple more things. I don't know why I said I want to leave, because there's a couple more things I really want to go over. So, and I apologize that this one's a little late, or a little long on a Wednesday, but there was just so much. And then I had to wait for the call. See what's going on here? It's not yet set, but you're seeing the DAX and the SPY. Okay, so you're seeing a positive divergence here, where even though that this relatively is dropping, the RSI is not dropping. So if you just come here again, and these are really simple for anybody to do, anyone can do this on the system, and you go here and you go EWN. Okay, what do you see happening here, right? So when I started looking at this here, I dropped this on a weekly just so you can see where it's at. So what you're doing is you're looking at the relative, right? The relative performance of what? Right? The Netherlands versus the US stock market. What are you starting to see? You're starting to see a possible turn. You didn't hit a lower low this time. If you really look at this chart, that's all you've been doing, right? For decades. What are you starting to do here? Not hit a lower low. So there's something going on there where we're starting to see a rotation. We started seeing it even with names like TM, if we take a look at this. And we're seeing this, obviously this is an Asian name, but we're even seeing that where Toyota's out there absolutely crushing it. And you're seeing a lot of people actually do the long Toyota, short Tesla trade. We're seeing that pair trade at institutions now. And if you take a look at this, it's kind of interesting, isn't it? Look at that. Like if somebody said to you that, who's going to be hitting all-time highs in 24, Toyota or Tesla, what would you have said, right? So things change, everything changes, nothing stays the same, right? But that's pretty obvious what's happening here, but that's the trade that's going on right now. They do pair trades where they'll sell one and go long the other, equal dollar amounts. And that seems to not be a bad idea right now, right? They are rotating into these sectors. Please understand that pins, okay, that is basically flat. If we take a look at where pins is right now, pins, a couple things here. It is not snap, so you're going to want to pay attention to this one tomorrow.